Okay. Good afternoon, everyone. I know it is getting a little delayed here, but no worries. We'll try to keep up the pace. So the topic for today's panel 2 is intelligent insurance at scale, redefining risk, growth, and customer value. So we are in the portal moment of the insurance industry. The convergence of AI, data, cloud, and ecosystems is fundamentally reshaping how insurers assess risk, engage with customers, and create value. So today's discussion is not about the technology. It's about the strategic choices, operating models, and leadership mindset that will define the next decade of insurance. So we have an esteemed panel of all the leaders who are shaping this transformation firsthand. I'm looking forward to have an engaging and candid and thought-provoking discussion. So before I start, I'd like to introduce my panel here, and they can talk briefly about what they feel about this topic in a minute or so, just to give a glance. I'll start with Tanu.
Hi, thank you. My name is Tanu Ahuja. Good afternoon to everyone. I'll keep it quick. I think everybody must be hungry. I am an insurance broker, and I'm an interface between the insurer and the client. So thanks, Mrinmoy, when you say that we are not going to talk about technology, but beyond that, because I don't directly deal with AI, but of course AI impacts me and how I interact back again with my underwriters and my clients. So anything that comes from me comes from that perspective. What cannot be replaced is where I step in. I think that's my introduction, and over to you.
Good afternoon, everybody. My name is Sandeep Bhosle. I'm part of the digital team. I work as a Chief Digital Officer for JM Financial Asset Management Company. Thanks to all of you to be here. We'll have one of the most interesting discussion, and that's a topic that has been going on.
Thank you, Sandeep. Venkat?
Good afternoon, everyone. Thank you, Milan. Actually, looking forward for an interesting discussion. Let's see how insurance shapes with AI.
Sure. Avinash?
My name is Avinash Naik. I head technology at Bajaj General Insurance. While we say we are not going to talk about technology, fortunately for somebody like me, the talk is all about technology and AI these days. And if you're not talking about it, it's like you're behind the curve. So I'm sure a few technology jargons will come into play today.
So it's a buzzword nowadays, AI and technology together. So coming back to the question, my first question goes to Tanu.
Sure.
So with AI and predictive analytics transforming underwriting and claims, do you see a future where human underwriting becomes obsolete, or it is a risk in itself?
I don't think human intervention can be completely removed from underwriting. Underwriting, of course, is supported by AI to a large extent, but a lot of underwriting, in my understanding of the business line that I get into, which is primarily financial and credit risk, is dependent on the underwriter judgment. And like we were discussing, a lot of underwriter judgment comes from the underwriter's experience over the years, 10, 20, 30, 40 years, and the number of transactions that passes through their hands. Not everything can be AI-driven, because even within the industry, as I see, I mean, say if I look at paints industry, five top paint manufacturers will have very different challenges. And these challenges cannot be captured by AI or advised by AI, because the AI is only as intelligent as the data I feed in. I think the data that I feed in is largely mass data and not so minutely fed in data that it can give me that judgment assessment which a human intervention or a human experience can bring in. One is that, and I also think underwriting philosophies differ depending upon which phase of the growth my client is Rather, underwriting philosophy is different for which phase of growth an insurance company is. What is the state of the book building that they are in? These are not aspects that AI can understand independently. And I think that's where human intervention come in. So if you say we're going to be completely AI dependent, I think that's pretty risky. That's very risky. That's my opinion, and I'm sure the insurers can bring in a different perspective to it.
Sure.
Thank you.
Thank you, Tanu. Thank you sharing your perspective on the same. So human beings cannot be replaced. And definitely you need a human in the loop in the AI things for any underwriting claim as well, right? And even the regulators also mentioned that you cannot outsource everything to the AI when in the case, it is a core business of our insurance industry, right? Underwriting is one of the core department, right? So you cannot outsource it to the AI at least. Okay, next question coming back to Avinash. So data is often called the new oil. But in insurance, are we actually using it to drive decisions, or are we still constrained by silos and legacy thinking?
So, Mrinmoy, I think if you had asked me this question about 3 years back, I would have still said that, we don't know our customer as well. But I think a few things have happened over the last 3 to 5 years, right? On one side, technology. Technology has evolved for us to be able to have all our data in a single place in a much more easier and seamless manner. So we undertook a journey to a cloud, data and AI cloud about 18 months back, and we have been able to get together all our data in a singular place. The second thing that has happened is KYC became mandatory for general insurance. So I represent general insurance, so I'll be speaking mostly about general insurance, which is everything non-life.
No problem. That's fine.
Earlier, it was hard to get, let's say, contactability of customers. There was no single ID for us to be able to say, hey, this is the complete view of the customer. But now, since that has become a mandate over the last 3 years, the quality of data has become much, much better. So for a company like ours, which serves more than 50 million customers and which has more than 350 products, it is important for us to have that primary identifier, for us to have that contactability. And once you have that, technologies make it easier, if not simpler, for us to stitch everything together and bring a single view of the customer. So if you were to ask me, in today's day and age, I think the problem of data being in silos is solved to a great extent. Can it become better? Of course, it can become better.
Of course. Thanks. Thanks, Avinash, for sharing your perspective. Next question I'll ask to Sandeep for throwing some light on customer experience and value. Based on your experience, Sandeep, we talk about personalized journeys, right? But are we genuinely personalizing experience or just digitizing the standard process with better UI?
Oh, that's a very interesting question, basically, because whenever you implement a technology in a company, it depends upon what you put forward on the table. Are you putting the customer first? Are you putting the ROI first? Are you going to make the life of your employees easy, or are you going to make the life of your customer easy? Now, you need to prioritize on that. So when we say basically that what organizations are really doing on it, it really depends not on what they are doing, it really depends upon what they are putting forward. Any project, any technology solution that you are bringing in, that needs a very clear on-the-table problem, that what problem are right now we're going to solve. It's an ROI problem, that's an ROI problem, then the customer is the secondary. If it's a customer experience first, then it's the customer experience first. It fairly depends upon what you're putting on the table right now. My colleagues also answered in a bit way on that. Tanu touched on that, the human intervention of the AI which cannot reach, and he said about the data that is becoming. So technology is going to solve all your problems. There is no problem that the technology is not going to solve. It's going to solve all your problems. It fairly depends upon organizations that what they put on the table first and for what they are right now going to do. Most of the organizations today are in a transition. Everybody is in a transition right now. It's for a moment, imagine the run of technology for the last 2 or 3 years was not there. We would have still were able to grow at a certain space. Solutions would be there, everything would have been there, and the work would have got done. Today, the problem is that companies knows that even if I don't deploy this, the work is going to go on. The urgency and everything, when it comes on the table, that is the time you will see a real difference in that.
Thank you, Sandeep. So next question, last to Venkat, mostly from the governance and regulation perspective. So Venkat, so responsible AI is a necessity. You agree that. So but practically, how the CXOs balance speed of innovation with governance without creating any friction between the other departments? Can you throw some light on that?
Actually, AA is everything now, the new buzzword, I think, responsible AA. So I say that responsible AA does not mean that it's like a gatekeeper or it will not put brakes to the business, I think. It should also help the business grow. It should be an accelerator. So when you sell that the speed at which innovation is happening and whether you have the related governance, that is the second part of your question, I feel. So I feel that as long as there is a embedded governance within the system, I think it doesn't matter. Only if there is a late governance, only issues crop up. The third part, you're telling friction and friction in the sense
Between the other departments, yeah, friction.
So friction, once controls are designed at the design stage, I think there should not be any friction. But once the product is developed, innovation is done, then actually if you start putting controls, the friction will always appear. And I also feel that whenever you talk about governance, it's more should be principle-based governance in the sense that for AA, in the case of responsible AI also, we can have some guardrails put upfront, I think. For example, we can tell that this particular data can never be exposed. Wherever you feel that a human is mandatory in a particular loop, we can fix. And decisions AA also can be, we can also, it should be explainable. Then every time approvals will not come to the CXOs. It will be more like they will be able to, we are giving them ownership with some responsibility. They will be able to go, we are empowering them, I think, with some responsibility.
So that's nice.
Yeah. And also, governance also should be risk-tied, I think. For example, if you are using A for a chatbot in a corporate website, the risk is different. But when you are using A for any claim denial, or else if you are using A for even underwriting decisions and all, the risk is different. So high-impact decisions, I think, require stronger controls, and low-risk use cases can be fast-paced,
yes.
I think. So this is something, but overall, actually, insurance is itself a trust-based product, actually. So when you start using responsibly the AI, automatically the trust of the customers and the confidence of the regulators, everything will improve. So in the model itself, we should design this responsibility, whatever is the aim. That's what I feel.
Okay, thanks. Thanks, Venkata, for sharing your views on the governance side. So Tanu, over to you again. Coming back to you on this question will be more from the growth ecosystem and embedded insurance perspective. So as an insurers integrate into ecosystems, who really owns the customer? The insurer, the platform, or the ecosystem orchestrator?
I think everybody owns, they all have in the ecosystem.
They have their share, right? Everyone is stakeholders.
Everybody is a stakeholder. They have their own set of responsibility towards the customer, but primarily at the end of the day, it comes back to the insurer.
Okay.
So if that's a clean answer, but yes, layered responsibility, answerability lies in every stakeholder of the ecosystem. I come from the broking background. I represent the insurer. Then I represent the client as well. So I know that I'm responsible for what I take back to the insurer for its underwriting purpose, and I'm responsible for how my client understands the contours of the policy. And like I said, coming back to the same thing, at the end of the day, it's the claims, and the claims are payable by the insurer. So it's the insurer who is most responsible. And
so you need to define a clear ratio between all the three parts, or what do you?
see, nobody can wash off their hands. I mean, if I do as a broker, I lose my client. The client trusts the insurer because it trusts me, while the insurer raises their hand in a particular case. But I'm also losing my client, right? So we all are equally responsible. On the paper, it looks like the insurer, but we are all owning the client.
So trust is the important word. Yeah, I do believe.
Absolutely.
Yes, if I come from the technology perspective, also trust is important.
Absolutely.
And even we call our zero trust infrastructure network.
Absolutely.
That is also we come.
Yeah, yeah.
So
It's a complete experience, and trust forms the core of the experience.
yeah, thank you, Tanu, for sharing
My
your views. Coming back to that technology part, Avinash. So cloud and digital infrastructure promise scalability, but do they introduce concentration risk that insurers are underestimating?
See, concentration risk has always been there. That's my view, okay? Even before the era of cloud, we were used to our own data centers. That in itself was a concentration risk. So data centers used to be in the backside of the CIO's cabin in earlier days. So that's a
Server
concentration
room.
risk.
That is server room, not the data center.
So that moved to colo, right? And then again, you are in a concentration risk with a colo. So I think that continues. I mean, nothing has changed in my view. But having said that, as companies grow larger, we are looking at getting into a multi-cloud setup. I was a proponent of a single hyperscaler until recently, and I still am. So for a company of our size, still I believe there is not much merit in having a multi-cloud just for hosting your applications. So we do have multi-cloud from a perspective of we want to use best of breed large language models across hyperscalers. But if I were to host my applications, I would still host them in a single place while we are looking at a DR from a different hyperscaler just to mitigate the risk. But the concentration risk, I think that story has not changed, and that will continue to be there. So I think it's a question of what you want to choose. It's a economies of scale versus the risk that you want to weigh.
Thanks, Avinash. Coming back to Sandeep, Tanu has spoke about the trust. So next question is related to trust only. So trust remains central to the insurance. In digital first world, what truly binds trust? Faster claim settlement, transparency, or something deeper than what we are still missing?
See, overall, if you fix trust or take trust as something, that forget for a moment which domain it comes from, basically. Ideally, technology can enhance trust, but it cannot manufacture trust, one. That's one place where all BFSI or all industry would like to work on, because at certain point of time, all the products are going to be more or less democratized. The silver lining between the two products or two companies will be primarily how you build an index of trust in between that. Now, technology cannot manufacture that, it can enhance that one. It doesn't make a difference that what is the list in your Excel sheet of what UI experience that we have made. It matters basically how the complete process for the consumer, you have made it very invisible. That's one. The trust is broken, or the trust of a consumer is broken or increased at a time when he is anxious and when things are not working, and that is the time where you have to solve it. The customer today understands this is a competitive world, there will be flaws, there will be problems. He does understand. The customer or the consumers are very well educated about it. They do not need anything which is very complex also, but they do not need at all something like that which will break their trust. An OTP coming after a 15 minutes or a 20 minutes will break a trust at certain point of time. That anxiety between that for 15 seconds or 20 seconds builds up that trust. In the years that you are going to see basically how a major problem that any organization will have to solve to all the technology that it has is how do you reduce the anxiety of the customer. The products, everything, the UI experience and everything, technology is going to democratize everything. There will be no difference between one bank account and another bank account. It's a green, red word. The customer needs a bank account, that's all. The only clear difference will be how you reduce the anxiety of the customer. When you reduce the anxiety of the customer at small point, that is where you will be able to build a trust. And that's where technology will come into picture. There's a human element. What technology normally does is basically drives a consumer towards numbers. That's how, because right now, we also said data is the new oil, and that oil literally makes your customers into numbers. The PAN numbers, the numbers, folio, everything is basically comes to numbers, in fact, and we start calculating customers into numbers itself only. the emotional touch or the emotional or the anxieties or the problems of the customer which the technology has to solve, that's a longer medium level.
Thank you, Sandeep, for putting your words. We'll take the last question. I think so that's allowed, right? Okay. So last question to Venkat. With increasing digitization, is cybersecurity still a control function, or it becomes a business enabler or competitive differentiator?
Yes, with digitization, I think if cybersecurity is definitely enabling the business to grow, I think, because actually if you see the way insurance sector has also digitized over the past decade, there are many digit insurance and all, which are all, there is no brick and mortar offices also. So cybersecurity has been a business enabler. But I would tell you that cybersecurity helps the insurance business in the form of issuing the, because when the your posture is good, automatically the confidence of your customers will increase. So they would be ready to share their data and all. So if they not only the terms and conditions of the policy they see, they also see what transparent is the institution and what are the data protection measures that are being put into before taking into decision. In addition, that cybersecurity also helps us to standardize these access controls, identity controls, and API-related security things, and also it will have a secure baseline in one way. So that's what. And in addition to that, I can tell that if you have a good posture, automatically there will not be any surprises when a regulator inspects, and also audit observations. Also, escalations will not be there. So all these things will be in the good interest of the organization. But still, I think organizations mostly are thinking cyber investments from the point of view of cost, actually. So, but if they should stop thinking that there should be a shift. It helps us in the brand value, improving the brand value. It helps you to protect your revenue. It also improves the trust among the customers and who are all looking at this organization.
So it is. So you mean to say it is both as a business enabler and a differentiator as well. So it is a combination of both, right?
Yes, yes.
So, okay. Thank you, Venkat. So thank you for all our panelists for their insightful and thoughtful discussion. I'm sure you will have key takeaways from our discussion and the questions. Thank you very much.